Good morning, everybody. Today is the second day in the month of June 2022. My name is Heritage Adisa, Markets Analyst at HFM Nigeria. Quickly, as always, we check through the markets, find out what the big stories are, how they affect asset classes, and if they provide opportunities, and then how we can take advantage of it. But please, like always, remember that this is just a communication material. Nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, this entire week, really, starting from Monday up to now, we've really had one of those weeks where everything is just all over the place. On Monday, we had bank holiday on Monday. Tuesday, we had some push and pull. Wednesday was really just everywhere, really. And today is really no different, right? We could talk month end, talk about month end, talk about new month. I feel like this entire week, really, I think until we get to maybe next week, I think next week we'll have something clearer to work with. For now, we have that overall environment where, things are not really all that clear and then you want to be more patient, right? For example, now today, sentiment is also still fragile. There's still some disjointed moves here and there, right? But generally, I had this written earlier, said risk sentiment remains fragile, right? And then there's UK bank holiday today as well. Um, and the bank holiday could clearly cause, lower liquidity in the market in the session ahead, and it could even make it, just push and pull to continue. And then later tomorrow we have NFP. So before NFP as well, we could get that slow moves before NFP, and then when it eventually comes out, whatever volatility we get from that, we're already heading towards the end of the week as well, profit taking the risk. And so it's a week where basically you just have that back and forth, right? And then I think until next week, before we get something really, really, really tangible that we can work with in terms of general overflow and general, full-fledged flow in the market, right? But a couple of things happened earlier. We had data for Switzerland early today, inflation numbers where it came out really hot on the monthly print as well as even the year-on-year print as well for the month of May, right? And then that clearly adds some pressure on the SNB, where because earlier, I think it was last month, SNB Chief Jordan already said that the bank is clearly watching or closely watching inflation, and they stand ready to act if inflation becomes embedded, solidifies, right, in the economy. And this is a sign. So that means that even the SNB could start to talk about some form of tightening. Now, the BOJ have stuck to the guns, being more dovish. But at the end of the day, if inflation keeps being a worry like this, it's going to touch everybody. And then clearly still a worry generally because central banks starting to hike. That's clearly bad news for equities generally and globally. Apart from that, we also had reports on the oil side. First of all, later today, we have OPEC Plus meeting. That is expected to hold later today. Oil supply is a bone of contention there, but there was sanctions on Russia from the EU looking to already ban about a third of Russian export to Eurozone, right? And then later towards the year, they're talking about 90% ban, right, from Russian oil. So clearly that reduces supply from the Russian side. And then earlier today, late yesterday, we also had reports from UAE and Saudi Arabia where they said they're standing ready to also increase their own oil supply if Russia's output declines, right? There's been some talk that between Russia and OPEC Plus looking to compensate them for the reduction in output. But we'll just have to see how all that plays out. But clearly, more supply from UAE and Saudi Arabia means more supply for oil globally, and that's not good for prices. And then we have oil prices down today so far about 1.35% so far. And then that's clearly one you want to pay attention to. Equities, yes, holding slightly higher so far today. Down yesterday we had the downside, especially on Wall Street yesterday. So what we're seeing so far today is more pullbacks. The moves are not really convincing. You look at the US 500, for example, it's barely up just 0.41%, so far today, right? Yet bond yields are high, but oil prices being down, some other commodities higher. You just have that push and pull here and there all over the place. Even in the currency space, there's a bit of a mixed bag there. CHF is leading the majors, but you have the pounds and the euro somewhere around there as well. And then on the weaker side, right, we talk about CAD being weak, you talk about USD being weak, right, on the weaker side as well in today's session. So all of that just doesn't really help, the overall mood that we have in the markets, right? I went on to also say the push and pull continues in the markets, right, even today's session. Overall sentiment remains really shaky. And until after NFP data tomorrow, we may remain in this environment that we're having so far. You look at strength versus weakness, CAD versus CHF. It's an interesting one, but despite falling so far today, it's gotten to a key level of support around 0.757. We'll look at it in a bit. And then USD CHF as well as also just falling, but broken below 0.96, but now retest that from the downside, right? For now, CHF strength remains. Because equities are up, doesn't really help CHF because it's a safe haven asset, so it doesn't really help. But generally, right now we still have that strength remain there. In terms of convictions, though, in terms of trying to chase this, though, it's a little bit tricky. We'd like to see what comments we have from members of the SNB, if you have any of them. Maybe not in today's session, but going forward, that would also help us in determining how strong they're really willing to take this fight against inflation. But we'll have to see how that plays out. Later in the day, we have job numbers across the US. We have ADP non-farm employment change, as well as jobless claims. And there's that to pay attention to. And then OPEC meeting as well. A couple of central bankers also scheduled on the wire. So we'll have to see how that plays out for the rest of the day. Quickly running across board, you look at the equities, for example, right? It's a perfect example of what I'm saying. Right, through this week, we've really not just been able to, do something concrete, right? Basically, we've just really been in one spot, and then it clearly just says, how about we be more patient as well, in trying to chase any of these moves, right? Compared to the kind of moves that we've seen over the last couple of weeks, where we had massive downside for some months, we had some upside now, and now we're really stalling at the top here. With central banks continuing to hike, that's bad for equities. We've had some form of pullbacks, so clearly, continuation to the downside would not be a surprise. But because there's really not been that much catalyst to really latch onto, it becomes a little bit tricky to try and chase this. I'm being more patient. We found some form of support going back to the 18th of May on this US 100 NASDAQ here, right? But because of the push and pull we've had so far this week, I'm being a lot more patient, not looking to chase any of this moves so far, waiting for something more concrete, something more highly convincing, strong, something with more convictions before I look to chase any of these moves. US 500 is also a similar one there. Back and forth still there. Yes, this week mostly grinding lower, right? But eventually or totally, right? We still have that back and forth, down, up, and then it's still a little bit tricky for me. Oil prices, yes, like we talked about, we've cleared through this key 115 level that we talked about earlier this week, on the back of this higher supply from Saudis and the UAE as well. Now, currently, we're back traded at this, because what I did was I drew a Fibonacci level from the lows of 19th of May up to the highs that we had, earlier this week, right? And right now, we're also bouncing off the key 50.00 level, which is also previous resistance levels going back to the 23rd through to 25th of May there. So, I mean, despite the fact that, yes, OPEC, yes, high production, all of that, I mean, we could see a bounce from here, but because there's really not so much I'm feeling right now, just being more patient is really a good way to go. You want to cross over and look at CAD versus CHF, and look at USD versus CHF as well. Yes, CHF strength so far today, but I think we have to be more patient. Looking at CAD CHF, for example, yes, it went down into this session. The moves marginal, just down to total of 0.23% so far today. And now we bounced up this key area of support going back to the 19th of May, tested as resistance again on the 24th of May, support resistance around the 30th and the 31st of May as well. And now we're bouncing off that level so far today. So, I mean, you don't want to be selling into support, right? Apart from that, you want to look at USD CHF as well. Another story there, right? This one now, yes, we cleared below. Let's clean this up. All right. Yes, we cleared below the 0.96, and now we're retesting 0.96 from the bottom. That 0.96 has also been an interesting level for some time now. A key area of support and resistance, right? Going back to a couple of sessions. So we could look at this and say, okay, you know what? In line with further, strength for the CHF, weakness for the dollar, we could look at this for the downside. But being both safe haven currencies in such a mixed environment is a little bit tricky. That's one. We need to look out for bond yields as well. How are bond yields trading? If bond yields push higher, because bond yields have been pushing higher now for a couple of weeks now, right? For at least this week, right? Starting from Monday. So, I mean, if that strength continues, what we're seeing so far today is just a little bit of pullbacks. If that strength continues, that should strengthen the dollar, and we could see this clear this back to the upside. So, because the convictions are lower, probabilities are lower, I'm being a little more patient, trying to catch or chase any of these moves. On the calendar today, yes, we expecting job numbers for the US. In terms of initial job listings expected to come in even continuing job listings expected to come in lower, right? New jobs added expected to come in higher as well. We'd like to see how that plays out. But apart from that, basically not so much on the calendar. bank holiday for the UK, I think for Italy as well, could keep liquidity a little bit lower in today's session. So there's that to also put at the back of our minds. But generally, I'm being more patient. I've been, more careful, waiting out for something more clearer, something more highly convincing before looking to jump into any of the moves we've seen so far today. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask. I would always, always, always do our best to help. Thank you. Do enjoy the rest of the trading session. Bye for now.